Welcome back, everybody, for my portfolio update for September. Now, I know we just started these last month, so there's going to be a little bit of overlap with some of the transactions, but we're going to show all of that as well as dig into the performance tab so you have a good idea of how that's calculated and how much of my portfolio value is actually contributions versus gains. Now, the idea, of course, is that we'll continue to do this every single month so you can follow along with my own performance and hopefully we can both learn something from it. Now, you guys might have noticed that I finally got my new artwork on the walls. It only took me 3 weeks, but hey, I'll take it. That's progress. If you remember last month, I said this, but I would expect going forward that it's going to be less of me getting out of positions and more just continuing to add on to the ones that I have. And I'm happy to report that I actually did that this month. So the theme for September was definitely slowly adding to positions I already had and just trying not to get caught up in the market downturn. So with that, let's get started for September. All right, so if we look at my current value of my portfolio, the total value is $222,640.17. So again, we're down from last month, which was $224, and down from $227 in terms of where it was in early August. Now, if we look at the 1 month change, you can see that it's still messed up because the HSA account moved over on September 5th. So it's skewing the numbers a little bit. It's going to drop off here in the next few days, but I didn't want to wait to make the video. So as we get into next month, that'll go back to normal. And that 1 month change will actually be my account value balance that's different from the month before. So first, let's look at the portfolio performance since inception, which was December 8th, 2022. And I will make this October 1st. And as you can see, compared to the S&P 500, my portfolio has a rate of return of 6.74%. The S&P 500 is at 10.48%. And so a couple of things about this number. One, we are underperforming the S&P 500, which we kind of already knew that. But I also want to talk about how this is calculated on the Schwab website, because what they use here is a time-weighted return. This basically means that the returns from different time periods are used based on when contributions and withdrawals happen, with the idea being that using the time-weighted return is supposed to isolate the performance of the fund so that you can compare fund managers against each other. So the good news is it doesn't actually count my contributions as gains because I don't want it to do that, but it does skew the returns a little bit based on time. But in addition to that, I'm going to start showing my value versus net contributions chart, which I think will help because you'll get to see the breakdown. So I skipped this chart last month because the beginning value and gains are confusing since I had part of my index-only investments in these accounts earlier in the year. So some of that is mixed into these numbers, but either way, you guys get to see all of my holdings, my cost basis, so all the information's there. I'm just trying to find a good way to show it that's consistent every month. But I wanted to be clear with you guys about what I'm showing so that you know I'm being transparent when it comes to performance. So if you have any questions though, let me know down in the comments. And just real quick, if we check last month's performance, we see that my portfolio was down 1.35%, but that was quite a bit better than the S&P 500, which was actually down 4.77%. And if we look at the breakdown of gains versus contributions, you can see that net contributions were $40,917.49, which is mostly the HSA transfer from earlier in the month, plus a few thousand of additional funds that I added to buy new shares. And once that HSA transfer drops off next month, this is only going to show new money that I add to my portfolio each month to buy stocks, which will be helpful. In terms of investment change, you can see that my portfolio lost $4,465.57, and I received $949.92 in income, for a net investment change of negative $3,515.65. So while it's never great to be down, it is nice to know that I made a little bit of progress in terms of total return versus the S&P 500. Okay, so let's get to my dividend income and see how I'm doing. So my dividends for September totaled $947.90, and we're going to get into each one of those individual dividends here in a minute. But if I look for the next 12 months, my annual dividend income is $4,474.87, which equals $372.91 a month. And if we compare that to where it was last month, it was actually $4,367. So it's a $106 increase, which is about a 2.5% increase month over month. That's not bad. At least we're going up. Because if you remember last month, that number actually was going backwards. So it's nice to have it growing again. And overall, my dividend yield for my portfolio is at just about 2%, and that's where I expect it to be at this point, because remember, my focus is dividend growth, not current yield. Okay, so let's take a look at what dividends I received for the month. There's going to be a couple of them that overlap with last month's video, but going forward, I'm just going to do the dividends in each specific month so that won't happen again. So on September 5th, I got a $57 dividend from Walmart. as well as a total of $155.02 from Valero across 2 different accounts. On September 15th, I got my incredible monthly dividend from Realty Income for 26 cents.
Dude.
On September 18th, I got a $152 dividend from McDonald's. On September 19th, I got a $188 dividend from United Healthcare. And on September 25th, I got a dividend for $396.62 across 3 different accounts from SCHD. So in total, my dividends for the month equals $947.90. So I had a couple big hitters this month as it related to dividends. Obviously, SCHD is one of my largest holdings and one of my highest yielding holdings, and that paid. McDonald's is a big holding, and that paid. And then UNH is actually my largest holding, and that also had dividends in September. So that just tends to be a really high dividend month, and it was helpful because just about everything in the market was down, so it's nice to get that dividend bump. And this goes back to that conversation we had last week about dividends versus growth stocks, where being able to have steadily increasing dividends really helps manage emotions when the market is down. And it's just a benefit that I don't think we talk about enough of dealing with the emotions related to investing. Okay, so that was my dividends and rewards for the month. So let's talk about buys and sells. Now, I had no sells for the month, only buys, because I feel really comfortable with my companies right now, and I'm just trying to add to them. All right, so what did I actually buy in September? On September 14th, I bought 15 shares of Apple at $175.84 a share, and that was between 2 different accounts. And then on September 21st, I bought 5 shares of American Express at $155.40, and that was between 4 different accounts. And we're going to get to this in a minute, but just painful. And then on September 27th, I bought 6 shares of Visa at $229.24 between 2 different accounts. And so one thing that's become obvious is that it's kind of a pain to have this strategy across all these different accounts. And now, obviously, I'm doing that on purpose where I have the 5 different account types because it helps me be able to keep top of mind the different account types as investors that we deal with, and then I can share that as I'm experiencing it with you guys. But the part that's a challenge is that I'm not doing drip. I'm manually investing dividends because I want to be able to put the cash into my best idea whenever I get it. But when you're dealing with so many account types and dividends being split across all of them, it just makes it challenging. So I'm probably going to take a look at what accounts I'm not really contributing to, or at least don't plan to for the near future, and maybe change those to drip. But we'll see over the next month or so if I decide to make a change. And then lastly, on September 29th, I bought Schwab's U.S. Treasury Money Fund in my IRA for $122. So the Schwab U.S. Treasury Money Fund's a new one for me, and in this account, it's actually a traditional IRA that I'm not really contributing to right now. So I got a dividend in it, and I'm just kind of parking cash there, and I decided, hey, if I'm parking cash, I might as well do it in a treasury fund that gets me about 5% yield with virtually no risk. And I may start doing this more and more as dividends come in. If I decide to park a little cash and maybe wait for some really great opportunities, then this might be a way to do that and get a little extra yield. So overall, no major changes, just continuing to add to positions I already have and taking advantage of lower stock prices. All good. Okay, so if we sort by percent of portfolio, we see that United Health is at a whopping 22.76%. And part of that is that, one, it was already a large percentage last month, but it actually had a good month where it went up, and I think everything else went down, so its percent weight has increased because of that. And then obviously the next highest is SCHD, which is about 18.81% of my portfolio. Then if we look at the other 3 holdings that are over 10%, I have McDonald's at 11.4, American Express at 10.38, and then Visa at 10.13. And in general, I'm good with all 3 of those. Visa could be a little bit higher for me, but I'm pretty comfortable with where they're at right now. And then the next 3 on the list are Valero at 9.53, Apple at 8.84%, and then Walmart at just over 7%. And then rounding out the portfolio, we have Starbucks, Berkshire, and Realty Income. Now, obviously, Berkshire and Realty Income are kind of special cases as to why they're there, but Starbucks is one that I said that I wanted to add to, and I will. I just haven't done it over this past month, but I would expect that to change, especially as prices have come down. And now, if you remember last month, I said that the 3 holdings that I wanted to increase my allocation to were Apple, Visa, and Starbucks. And I added to Apple and Visa, so those are slowly increasing. And I actually could have added to Starbucks, but instead, I decided to add to American Express. Even though I think its percent weight is probably okay for what I want, I just felt that in the $150 to $155 range, it was really good value. And the funny part is last month I actually said that McDonald's was one I probably wasn't going to add to because it wasn't really at a good price at the time. But it's since dumped about 8%, and now I actually think it looks really attractive. So don't be surprised if you see McDonald's on the ad list for next month. All right, so let's talk about the individual performance of each holding. So Valero is still my best performer at 23.88%. And the sad part about this is that if you would have looked at this about a week ago, that number was like 32%. But it's been just a brutal week for Valero and really the market overall. United Health is at a nice 12.32% return. Berkshire's at 9.63, and then Walmart has seen a little tick up, but even though it hasn't really outperformed the way that I want yet, I do think Walmart has done a good job of just being a steady performer and just growing slightly and not really being as volatile as the rest of the market. Now, part of that is just the nature of Walmart and their company and how their stock trades, but I do think that there's some positive signs there. And now if we look at the rest, they're all down. Visa, I'm down about 5%. American Express as well. McDonald's, I'm actually down 6% now, which is kind of interesting because McDonald's was the first position that I actually bought for this portfolio back on December 8th, 2022. And it had been in the green for a good part of the year. And now all of a sudden with the most recent downturn, it's in the negative. All right, so if we go to Seeking Alpha and just look at the 1 month performance of all of the stocks in my portfolio, you can see United Health is the only one in the green. Everything else is just down, and in some cases, down by a lot. But United Health has had a really good month at 7.5%. And then, Walmart's been down this month, but still overall, they're doing okay. Valero actually had a really big uptick this month and then just crashed. So it's only down 1%, but it's been a wild ride. And then for the rest, a lot of these have been really poor. Now, SCHD is down 7%, Visa's down over 7%, Starbucks down over 8%, American Express down over 8%, McDonald's down over 9%, and then Apple down over 9%. And we won't even talk about Realty Income because they're just getting decimated right now. So it's easy to see these downturns in the market and get impacted by that because we have these apps on our phone, we hear the news and get the alerts, and it's just really important to try to be as calm as you can be and just have your plan and keep working it. Don't worry about what the market's doing today, tomorrow, or the next, and just continue to see progress as you go. All right, let's talk about the month ahead and what holdings I think I'm going to continue adding to going forward. So in terms of ones that I want a higher allocation to, it's the same three as last month: Apple, Visa, and Starbucks. In terms of ones that I think are the best value right now, I would say probably McDonald's, Visa, American Express, Valero, Apple, Starbucks, Realty Income, or SCHD. I mean, basically everything in my portfolio right now except for Walmart. Now, some more than others, but in general, as things have come down, I'm really liking the prices on the things in my portfolio, which basically means that any of those are likely to be on next month's ad. But like I said earlier, I would be shocked if McDonald's isn't one of them. I would be shocked if Starbucks isn't increased as well, and we'll just see how the month goes. And the cool part about this is that it really was good timing with the video last week about dividends versus growth stocks, because the market has been going down. And in some cases, I have positions like McDonald's, which I've had for 10 months, that were well into the green, that are now well into the red. But because I know what I'm building and I know what my goals are, and I can see that dividend income slowly increasing, and I really understand the fundamentals of the companies that I bought, I'm just really not worried about it. But I will tell you, in past years, that really wasn't the case because I was just kind of buying things and hoping and not really understanding what I bought. But while it's never fun to watch a portfolio actually go down, it's nice to know that these concepts that we're talking about are actually getting put into action and seeing some tangible value from them. And remember, it's just 1 month. Always compare your progress to your long-term goals, and price isn't the only thing or even the most important thing you need to be comparing. So just as a refresher, here was my goal again and my strategy to get there. My goal is to beat the S&P 500 in total return while creating a growing passive income stream for my family. And my strategy to achieve it is I want to attach myself to companies with wide moats that are generating increasing cash flow and rewarding shareholders with dividend growth that outpaces inflation. So if I keep those in mind and I recap last month, here's what I see. My portfolio went down, but actually it went down less than the S&P 500 did, so I actually gained some ground there, believe it or not. My annual dividends went up, and my allocation to 3 great companies went up. So for me, that's definitely a positive month, regardless of what the market's doing in terms of price. So how'd you guys end up for the month? Did you actually get to add anything interesting to your portfolio? Let me know down in the comments below. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you guys in the next one. Peace.